Now, the quietness in the market lately has, of course, been largely attributed to market's reaction to Kenya Commercial Bank's rights issue. But joining us in studio now is Mbithe Mwema, an equity investment analyst with Renaissance Capital, to take us through that, as well as some of the highlights emerging from the annual investment conference happening in Moscow. Let's begin by looking at the markets today. What are some of the events shaping the Nairobi Stock Exchange today?
Volumes are actually up on a day-to-day basis. Yesterday we did 250 million Kenya shillings in terms of volumes. This went up to 334. And what happened yesterday was most of the local fund managers were actually settling their bids for the debut 25-year bond that was issued last week. Today volumes were up. Most of the active counters were Bamburi Cement. Safaricom was also very active, and KCB was also very active. On the Bamburi counter, it was local institutions that were exchanging their positions on this. On Safaricom, it was foreigners who are actually selling their positions to local fund managers.
Let's shift our attention to the Renaissance Capital Annual Investor Conference currently taking place in Russia, Moscow, where Africa strongly features as the next frontier. What would you say are some of the highlights that have emerged out of that event?
This is an annual conference that Renaissance normally hosts every year in Moscow. And the exceptional thing about this one is we had the former president of Nigeria, who actually came in to give a context of what it means to actually invest in Africa. And we also had Bill Clinton speaking at the forum as well. And I think these two people are well knowledgeable about what happens in Africa. And they didn't look at it as though it's a harmonized investments in, environment. There were key issues in terms of sustainability of businesses that are coming onto Africa, and proper infrastructure to support investments that are actually done in terms of foreign direct investments. But the key thing that came out was there are great opportunities in terms of investments in arable land, but the detriment to this is essentially poor infrastructure within the different African countries.
Let's just delve into some of the issues which you have just talked about. And China, the relationship between China and Russia is one of the things that emerged very strongly, where entry and tight competition within the Chinese market is a major challenge, even for Russian companies, which are much larger than some of the African companies trying to enter into that particular market. Coming out of that event, what would you say are some of the strategies that African companies can take as they enter into the Chinese market?
I think from the plenary sessions, what came out very strongly was the fact that in as much as there's going to be increased competition because of China and the other BRIC countries coming into Africa, that is not necessarily by itself a bad thing, because essentially what competition does, it improves the quality of the products that get to the end consumer, as well as giving the end consumer choice and ensuring that the end consumer actually gets quality at an appropriate value in terms of affordability. So the Chinese actually coming on board, and I'll take the example of the Kenyan roads that are being constructed by the Chinese who are working day and night, and the quality of the roads has improved. It's not necessarily a bad thing. I think it opens up, it unlocks potential within the African context, and helps the African countries in terms of the government, in terms of the private stakeholders who are indigenous African companies or individuals, begin to acquire technical abilities, as well as get access funding from these developed countries that have extra funding to deploy.
You've talked about the opportunities for investors within the African continent, and of course arable land across Africa did stand out for some of the speakers at the ongoing conference. How much opportunity is there in Africa and arable land, given the fact that in Kenya, for instance, there's been a lot of debate in terms of how much foreigners should actually be investing into arable land?
I think this would be it depends on the regulations of the different countries. If you take Zimbabwe on one extreme, no foreigner would actually be looking. Then if they're looking, that would be sort of a risky investment for them. But if you look at Kenya, based on the regulations, I mean, that are going to be changed depending on the constitution, it's just a situation of reducing the tenor of ownership by foreigners, not actually saying that you're not going to let the foreigners come in. I think the arable land opportunity in the African continent will be highly supported by the infrastructure. And the beauty about having the foreigners actually coming in is that, again, the technical expertise, because we have some of these renowned companies that are based out of Europe, out of Dubai, that have actually built buildings en masse. And these are companies that can actually come in and take in a stake for maybe 100 years on the Kenyan front in terms of arable land, and come up with commercial buildings, residential buildings, and efficiently help us address the demand issue in terms of their lacking opportunities in terms of housing to meet the demand that's actually there in the African front.
Now, Kenya is very very well represented by some big hitters such as James Mwangi, the CEO of Equity Bank, where he talks about the opportunities in Africa, some of which you've just talked about. But sentiment carries the day where investors are concerned. And as Lerato mentioned earlier when she was talking about the shilling, political risk is still a factor in this country as we approach the referendum. What would you say is the current investor sentiment currently for Kenya?
Okay, I'll probably just take you back to Equity Bank and James Mwangi. And I think for us, this is our transformational African story with the convergence of Safaricom and coming up with a new product, M-Kesho, and the fact that Equity Bank actually understands how to bank the mass market, enhancing banking services, banking access into the bottom of the pyramid, and not just handing out services, but actually charging for these services and enhancing access. So that's definitely been a big ticker for them, and we've seen the appreciation in price on the back of this. But general sentiment on the Kenyan front, it's still positive as is, but probably the point of caution would be when the foreign investors who've actually been supporting the market, making up about 70% in terms of average volumes on a day-to-day, come out of the market, close their positions at the end of July, because normally what tends to happen is this fund managers in the international markets will take a break in the month of August, and given the political scenario in Kenya, most of them, I suspect, would be closing out their positions, and this could lead to a mild correction on the NSC.